Bismillahirrahmanirrahim. First of all, Excellency, Namindas, EU Ambassador, it's fantastic that you've been able to pull this together. Obviously, was going to happen last year, and then for unforeseen circumstances, it had to be postponed. So I would like to join you and the Prime Minister in welcoming the EU delegation, the Honourable ambassadors here from EU, the distinguished delegates. It's an absolute pleasure to be here this morning. The slides are there. If you can read them, it's fine. Otherwise, don't worry about it, because it's just for the background. The whole idea is to walk through our economic journey over the last 3 to 4 years and the current status and the current state.
So this one.
The situation at this point in time. And then where do we go from there? Let's start with the macro situation. Notwithstanding the conflict over the last couple of months, we have been consolidating gains in terms of our macro indices. It starts with our fiscal situation. We have had a primary surplus, we've had a fiscal surplus, and it's on the back of that, we are in a relatively good position in terms of our GDP growth. The central bank at the beginning of the year had mentioned that our GDP growth will be anywhere between 3.75% and 4.75%. Our best estimate at this point in time is that this fiscal year will grow at roughly 4%, which is much better than where we were in the last fiscal year at 3.1%. Notwithstanding the policy rate hike yesterday by 100 basis points on account of the inflationary discussion, our debt servicing cost this year is going to be much less compared to what we had budgeted. So that again gives us a fiscal space to do other things in terms of going forward in our budget allocations. But what I really, even the audience here, what I really want to dwell on is the external account. Our current account in March was a little over $1 billion, which meant that the first 9 months of this fiscal year, we are also current account surplus. And it matters. It matters because it's on the back of the underlying drivers. The IT export services continue to lead the export journey in a very big way. The value-added segments on the export side also continue to show positive delta. Our remittances continue to go from strength to strength. In March, we had remittance flows of about $3.8 billion. Of course, there's a spike here because of Ramadan and Eid. But normalized is about $3.2 billion per month. And I'll come to the elasticity of it at a later stage. Another avenue which has really sprung up in the last couple of months is the Russian digital account. Now that is a different client segment compared to the remittances. Remittances are essentially blue-collar workers and Pakistanis who are working in various parts of the world. The Russian digital account is essentially a lifestyle investment debt flow. And people can bring that money in and they can take it out whenever they want. They don't need MOF, they don't need state bank approvals. Normally we have seen that flow averaging about $180 to $200 million. In the month of March, we clocked $260 million of these inflows. And if I look at the situation as we close out April, is going to be much larger than where we closed March. Now, the other thing is that April, the month that we are closing now, was a heavy month in terms of repayments. We had the Eurobond repayment. We repaid one bilateral partner in terms of maturities. We got some additional support for another bilateral partner. But this is also a month in which we access the private placement Eurobond market after a gap of 4 years. And we printed $750 million, which has be late bond, because that's a lot of feedback that we receive from institutional investors, that has been a missing link in terms of our product repertoire. This external account situation is important. We will need $60 billion at the end of this month, and as the governor of the central bank mentioned in his after the monetary policy committee discussion yesterday, that we are quite clear that our reserves are going to be at $80 billion at the end of June. That will take us to roughly 3 months of import cover, which is a great advantage. I'm dwelling on this when we talk about macro stability, because from my perspective, this is basic hygiene. All of you who are here today, you want that your profits can be repatriated, dividends can be repatriated. It's important for the local investors, it's important for the foreign investors, and this is the only way forward from macro stability into sustainable growth as we go forward.
So there's a lot of discussion about, whether macro stability, the structural reforms. These are all areas, and I'm just going to go through very, very quickly around some of these structural reforms. On the taxation side, is people, process, technology. We have a long way to go in terms of reforming our taxation system, but we have been able to move the needle in terms of tax to GDP ratio. We have been able to improve the overall absolute revenues by deepening and widening the tax base, and a lot of this is technology-led. So AI-led digital monitoring, AI-led CRM, and that has helped us plug a lot of leakages in the system. It's something which is still in progress. Digital, I think this is very critical, right? Because from my perspective, it means if you are on a digital journey, it's faster, cheaper, better. It's as simple as that. But this one is one which is being led by the Prime Minister himself for all the right reasons in terms of moving us towards a digital economy. There are sort of 3 pillars to it. One led by Governor of the Central Bank, digital payments adoption, digital public infrastructure by the Federal Minister IT, and our government payments led by the Finance Secretary. And this one is important because you can only make progress if you can measure something. There have to be real KPIs, which we discuss with the Prime Minister every 2 weeks. And if you see, some of the things which hadn't happened for years have happened in the last 6 to 12 months. So active merchants on digital payments, we are at the end of March at about 1.13 million. We want to be at 2 million by the end of this, by the end of June. Remittances, which is the lifeline of the country, 92% are through digital channels, and it will be 100% by end of this fiscal year. Financial inclusion, obviously very, very important. So to get to a 70% mark by end of this year, and then you can't see the slides down there, but in terms of our government payments, we essentially want to get everything through the digital rails. It will improve transparency. Again, it takes care of the leakages in the system, etc. And when I say leakage, let me be very clear. It's also an euphemism for corruption. So we want to get rid of all of this stuff by using the technology which is available. If you can go to the next slide, please. Now, tariff reform. There was a lot of debate and discussion because in some sense, the world was closing down in terms of increasing protection. So for us, it was a very, very bold decision that in July 1 of last year, we said we are going to bring down our tariff regime, custom duties, additional custom duties, regulatory duties, so that our industry actually gets competitive. We have at times protected our industry for the longest time without sunset clauses, and that is not sustainable. So a lot of this, what has happened in the first year, is that we have reduced these duties, especially on intermediate goods and the raw materials, so that we can make our export industry more competitive. And when we talked about this with the World Bank group, etc., and the chief rep is here, they said that, they compared it to how Southeast Asia started on this journey in the late 90s, and this can very well be our South Asia moment. Next slide, please. Energy sector reforms. I understand the delegation has already met Minister Lagari yesterday, so I'm not going to dwell on that. He's sort of leading from the front in terms of the tariff rationalization which has happened, market and structural reforms, competitive multi-buyer market, I think is very important. The NTDC restructuring, reduction of the circular debt, improving DISCO efficiencies. I think it's very, very critical. It's because of that efficiency which is going into the system that we have been able to reduce the subsidies from the Ministry of Finance into the power division. And those have been coming down consistently over the last couple of years. Next, please. Right sizing. Now, this is a task which I have been given by the Prime Minister to reduce the footprint of the federal government. As you can appreciate, there's a lot of pushback on this because either the ministries would say they are doing God's work, or it hasn't happened for the last 77 years, but inshallah it will happen next year. So there we are sort of pushing that back. We have sort of merged some of the ministries. We have closed down some of the departments where there was misuse. It's not about the people who are working there or the exact costs associated with the FTEs. It's really the subsidies and the misuse of the subsidies. When we close these, and when we, for example, Utility Stores Corporation, where we've been giving subsidized food through the system, now it is being done, transmitted, digital wallets to the vulnerable population. And I think that's the way to go, and we have some way to go on this as well. But we are well on our way. The process is very simple. We discuss this in the committee, we take it to the cabinet ratifies this, and then we bring it back into the implementation. Maybe we are not moving at the same pace as Argentina, but we are certainly going in the right direction. Next slide, please. Privatization and necessary reform. I think this is critical because the Prime Minister is very clear, we are all very clear that the private sector has to lead the country. So in the first year of our administration, quite frankly, we did not do too well. We did not get traction. And the privatization of the First Women Bank, and then the tailwind which we have now gotten through the PIA privatization, which is very, very important because it ticks so many boxes. In the first instance, the combined bids that came in from two large conglomerates from Pakistan had a total tally of about $1.2 billion. Now that's a large sum of money where local investors want to come in and invest in a national asset. And the fact that the large groups in the country are willing to work with each other as consortiums, I think is also very important. So the next one, just previous, so where do we go from here? As Minister Lagari must have told you, 3 EOIs for the distribution companies, 2 in advanced stage. So we are moving forward with that. The airport where you landed, Islamabad Airport, our last attempt wasn't successful. We are going back for appointing the financial advisor on that. And then very quickly we want to move to the Lahore and the Karachi airports. 2 FIs which are also on the privatization list, along with insurance, etc. So we are going to move forward with privatization with a lot of gusto, inshallah, during this year. Next, please. I think debt management I've talked about in the context of external debt, but in terms of internal debt, we have done a lot of liability management trades. We have just restructured our debt management office to bring it into the 21st century. Ex-Deutsche person is now actually heading our debt management office, and we're doing liability management trades, etc. And as I mentioned, because of all of this stuff, we will be having a debt servicing cost which is much less than the budget. Next one, please. Pension reforms. The new colleagues who are joining in the civil government, they are now on defined contribution, armed forces from next year, and there are parametric reforms as well. Here, what we have done is stop the bleeding. The stock is still there, and we still need to figure out how we go about it, but we have to start from somewhere, and that's what we've done. Next, please. Now, everything that I've talked about so far is in the context of what I would call is old economy. it was beginning of last year that we figured out that we had 40 million crypto users in Pakistan. So we were behind the curve. We were number 10 at one point in time, then we got to be number 7, and beginning of last year, we were number 3. So we had to formalize this, both from a defensive perspective, KYC, AML, CFT. As you know, we got out of the FATF regime a few years back, so we don't want to move back there because of flows which are outside the formal system to this extent. But on the other side, the upside associated with that is huge. And that's why we went into the Virtual Asset Regulatory Authority. We went to the Parliament. We got this bill approved. Under this, we are going to be now, we are in advanced stages in terms of issuing licenses to the exchanges. Also, we are looking at tokenization. And in the first instance, we are looking at public debt as a use case and see if we can move forward from there. The other thing is, it's not only about crypto. This is, you have to look at it in the context of overall Web 3.0, blockchain, etc. We have the third largest freelancer population in the world. If they are coding today at $10 to $12, and if they get educated and come up the curve, get reskilled, upskilled in terms of blockchain, they can start coding anywhere between $50 to $250 per hour. Fantastic for them, great for the country. And therefore, we are very, very focused on this new economy as we go forward. Next, please. So just a couple of last slides. Access to finance, I think it's very important to focus on small farmers and what we are doing there. And again, this is being done sort of digitally. We want to have 750,000 new small farmers in the next 2 to 3 years. Affordable housing, I think the Prime Minister is going to make an announcement around that tomorrow. Also EV, which SAPM Arun Akhtar is sort of leading in terms of especially two-wheelers and three-wheelers. Energy efficiency financing, 88 million fans to be replaced over the next 4 to 5 years. And we are providing, subsidies, we are providing first loss guarantees so that this transition can happen sooner than later. Next, please. Next. So I'm not going to go there. There are a number of things there, but I do want to mention the spectrum auction. This has again happened after a gap of 13, 14 years. We had a very successful spectrum auction, increased connectivity, better service, and the introduction of the 5G services in Pakistan. That's going to be very important. A lot of people talked about number of MNCs which have left the country, which we appreciate in terms of the global decisions, their participation choices, whether these are products, regional, etc. But there are a number of them who have actually entered the country in the last 18 months as well. WION, which has sort of stepped up in a very big way. Google's office is going to be opened in July. BYD, which is going to start assembling their cars early next year. Aramco Airports, Nestle, which when we were in Davos, they announced additional $60 million of investment in Pakistan, etc. Next, please. Well, I was in Washington sort of a couple of weeks back, where we met all the multilateral partners, we met our bilateral partners, my counterparts, etc. The message is very clear. Generally a lot of appreciation for the journey and the economic transformation of Pakistan, but also the message, stay the course. And we get that, and it's very important. Fitch has just mentioned that they have reaffirmed our rating. Next, please. Yeah, these are all the surveys. I don't want to get into that. And the last piece, which I think is the next one, please. Yeah, this one is important. Just like COVID, which was the single largest demand shock in recent history, what we are experiencing is the single largest supply shock in recent history. And what we have, what we can say, sort of now 2 months into the conflict, is that the demand shock is very, very different. And what we are experiencing is the single largest supply shock in recent history. And what we have, what we can say, sort of now 2 months into the conflict, is that the demand shock is very, very different. And what we are experiencing is the single largest supply shock in recent history. And what we have, what we can say, sort of now 2 months into the conflict, that the country has negotiated the first order impact actually quite well. In terms of procurement of molecules, in terms of the transmission of pricing, in terms of targeted subsidies, the availability of fertilizer, availability and therefore the food security element, which is all there, and it's very obviously very important. And then of course negotiating the various trading routes, the logistics. So the first month or so, I sort of chaired this forum along with the Minister of Petroleum and other cabinet colleagues. Now this has gone into a more structured format in terms of NCMC, which I think is the right thing to do, because the reality is, even if there is secession, and as you know very well, that our leadership is at it and is not giving up. So I think that's the good news, and the fact that the ceasefire is still there, which means people do want to give diplomacy a chance. So while they are doing what they have to do, we need to ensure that the country continues to move forward. And from what we can see in terms of international benchmarking, etc., we have done relatively well in terms of the first order impact. Now, having said that, there is no doubt that given that the energy infrastructure has been hit, even if there's secession tomorrow or in a couple of weeks, etc., there's bound to be second order, third order impact. And that's what we are now actively working on, between myself and the governor and other cabinet colleagues, to see what should be our policy responses. Action has been taken on inflation yesterday by the central bank, what it means for our growth, what it means in terms of elasticities of our exports and remittances, what it means in terms of external flows. As I said, in terms of external flows, we are, we're still looking quite positive in terms of the institutional fixed income flows which have come in this month, and also the RDA flows which are coming through. But we need to look at it in a sort of a medium-term perspective, and that's what we are working on. Having said that, I don't think there's ever a silver lining in discussions like these, but the way our ports have certainly become active. Karachi, Port Qasim, Gawada, in terms of the transshipment routes, and again, this is an opportunity for Pakistan to see how we make this a permanent solution in terms of the diversification of routes as we go forward, and our ports can play a very important role. Also, when you go through shocks like these, you sit back and you think through what we could have done differently, or more importantly, what we should do differently in terms of energy security. So in terms of having strategic reserves, moving and accelerating our journey towards renewables, all of that is now sort of work in progress. Once again, ladies and gentlemen, welcome to Pakistan, and I hope you have a very good stay, very constructive discussions here. You heard SAPM on behalf of the Prime Minister. We are all here to help, support, assist any way we can for the investments that are now coming and should be due from EU. Thank you very much.